Have the bulls successfully defended the major 25.2k support, or will the bears continue to push the price downward? What can we expect with the upcoming interest rates based on the current inflation data, and how is the short-term price action looking? Let's go ahead and dive into the video. Okay guys, welcome back to the channel. Thank you for tuning in. I hope you're all having a fantastic day today. In today's video, we're going to be going over the macro and short-term charts, discussing what the recent bounce means, where Bitcoin can go next, and are the bulls actually reclaiming control, or is this nothing more than a short dead cat bounce before an inevitable continuation lower? Alongside that, we're going to be going over the inflation data and upcoming interest rate hike, or should I say potential interest rate hike, in a couple days. Before we get into it, smash the like button, hit the comment button, and subscribe to the channel. We post daily videos for Bitcoin focusing on the facts, the data, the technical and structural information, and the relevant economic events. No hype, no BS, no emotion, pure raw TA. If that is the kind of content you're interested in, join us on Telegram. It is the third link down below. You'll get access to charts. You'll get access to updates, analysis, videos, educational posts, news events, and so much more to keep you in the loop with cryptocurrency, with Bitcoin, and the relevant economic news. If you're interested in joining our trading channel, we have a VIP channel where we post trading signals, exact entries, exact targets, exact stop losses for trade signals, such as this one over here: entries, targets, stop losses, trade justification, charts, and exclusive analysis. You'll also get access to our group chats, general chat, trading chart and education chat, news chat, trade setup chat, help chat, and daily video chat. If you're interested in accessing all of that, go ahead and contact me in the pinned comment in the free channel to find out the entire trading track record since February 2021, and of course the membership details and details on how to join. Let's dive into the video, guys, starting on the market data. So actually, before we do get into that, I do want to talk about this, and this was another ETF news, and this was from the asset manager Franklin Templeton. They announced that they will be filing an ETF with the SEC. Again, this is a $1.5 trillion asset manager, and we did see the market rally on the short term based on this. This large move toward the upside was primarily driven through this ETF news. And I want to pose a question to the viewers: how often, or should I say, how many more times do you think retail is going to positively react to this news? Knowing that we've seen ETFs file, and then we've seen them denied, and then we've seen delayed and delayed and delayed, and we've seen almost this repeat cycle of delays for these ETFs, and every single time it happens with these large crashes. And I just want to think about, how many times does this need to happen before retail takes a step back and says, well, maybe we should be waiting for them to actually get approved before we react positively in the market? And that's just something to think about moving forward. Again, when you're jumping late into these news events, when you're trading these news events, you're probably always going to be late. Your odds really aren't in your favor. When it comes to trading, it's all about probabilities. It's all about taking positions based on those probabilities. When you're trading into news events, the majority of the market, the big drivers behind the market, the big money, they've already put their positions in. You're jumping in late. Something to think about moving forward. Moving into the market data, we can see 24-hour volume is down 30%, sitting at 58 billion. And 24-hour liquidations are down 51%, sitting at 52 million. And again, we've had some consolidation in the last 24 hours up around this upper level of resistance. We'll come back and discuss this when we jump into our short-term analysis. Moving on from there, taking a look at our monthly return, September is actually in the green right now, 1.16%. Again, we did see a pretty large rally on the basis of that ETF news. Be very interesting to see what happens to the price action moving forward. Again, we'll discuss that in today's video. A lot left in September to make us mind up. We're only just under halfway through in the month. Moving on to our volatility index, we can see the 60 is pointing downwards over here, and the 30 on the 30-day volatility index, we have seen a small little hiccup over here on the 30-day volatility index. Nothing too significant, actually jumping up around 0.8%. Moving over to liquidations, we can see the majority of the liquidations came from the short positions, but overall pretty evenly spread between those longs and shorts, a little bit more in favor of those short positions. Moving over to the DXY has rejected from that upper level of resistance. Again, this upper level of resistance being that close to 1 year, it's about 280 days, I believe, long resistance level, 282, 285 days. And again, if we do break above here, this will be ultimate pain, right? This is going to be incredibly bearish for asset market, all right? We're going to see the stock market fall. We're going to see cryptocurrency fall lower. This will be incredibly bad if we do push upwards. While we remain at this resistance, if we go ahead and say, well, let's delete everything between here to make it easier to look at, we really are just primarily ranging between these two lows, right? We're ranging between this low range over here at around 100 and this upper range over here, and this is a horizontal consolidation. Again, the directional break will determine the directional move, and therefore a break upwards will be very bearish, a break below will be very bullish, and until then, we're kind of in this decision zone, or should I say indecision zone, where we're consolidating sideways. On the shorter term time frame, if we take a look at the current price action, the current structural formation we have is, of course, a rising channel formation. This, of course, is a bearish pattern. Okay, it is an uptrend, but it is a bearish pattern. It represents overall exhaustion. We can see RSI is pointing downwards now, price action is pointing upwards. This is a bearish divergence. Exhaustion at resistance increases the probability for a rejection, but we do have to keep in mind the DXY moves on a lot more than just technicals and buying and selling pressure, as buying and selling pressure is often and heavily influenced by what is happening in the economy. So if we have interest rates move upwards or hike, we're very likely to see the DXY rise upwards. If we see inflation continue upwards, we're very likely to see the DXY move upwards, no matter what the technicals are suggesting. So let's go ahead and take a look at that. We had inflation data just come out, and inflation data actually came out a little bit higher. It came out a little bit higher than expected. Our CPI was actually plus 3.7 year over year. This was going to be from plus 3.6 estimate, and our core CPI year on year was plus 4.3. Again, this is equal to our year on year estimate, but in general, both have actually risen from the prior periods, from the prior monthly reporting dates. So we actually have seen, for the first time, inflation rise again. And with rising inflation, we do run the risk of course, rising interest rates. Now, currently the interest rate ratings have not kind of adjusted for that rising inflation. We have seen the current expected interest rate to be a pause at 97% and a rate hike of 0.25% at 3%. It'll be interesting to watch how this actually moves forward over the next couple of days of interest rate decision actually happening in just over a week, so the 21st of September. Be watching that very closely. Again, if interest rates actually move upwards, we're very likely to see the DXY move upwards. And if the DXY moves upwards, we already know what's going to happen to the markets. We're going to see continued pullbacks on the higher time frame. Moving over to this chart over here, really briefly, we can see the correlation between inflation, interest rates, buying and selling, and of course, asset prices. Really quickly, this chart does represent what is happening. We saw inflation rise. If inflation is rising, it does indicate the probability for a rate hike to increase. Very important to understand, one interest rate hike is not enough to push one inflation rise is not enough to push interest rates up. We need to see consecutive month-on-month rising inflation to then impact the probability of interest rates rising. If interest rates rise, the cost of goods and services rise, the dollar rises, okay, available household decreases, debt to service ratios increase, and therefore, from a company perspective, they have to either sell their assets to increase their cash flows, to make their balance sheets look more healthy, to service their debt ratios, which they service their debt, which they take on to acquire income-producing assets, okay? All their stock prices will crash, and then you look at available household cash flow, obviously that's going to be decreasing, which will result in two things, either avoidance of buying risk assets or of selling off those liquid assets to service those long or short-term debts, mortgages, car loans, whatever it may be, that can happen. Moving on upwards from there, if we take a look at our inflation and interest rate curve, we can see that the trajectory of interest rates are very correlated to the trajectory of inflation. We have seen inflation plateau downwards. We have seen recently inflation plateau for the last 2 months. We've seen inflation plateau. As a result of inflation plateauing, we've seen interest rates plateau, right? This black line represents inflation over here. And we saw interest rates plateau. Very simple. interest rates form the basis of perceived systematic risk in the market. They form the basis of risk, right? What is the risk for an investor? What is the risk for a risk asset investor in the market? And perceived systematic risk is simply the perception of future risk, and risk being elements of risk that you cannot control: interest rates, inflation, monetary policy, taxation policy, okay? So when we're looking at this curve over here, what it does suggest is it suggests interest rates are lagging to inflation, and therefore interest rates and inflation have a positive but lagging correlation. So if inflation rises, which it has, it just did rise, we're likely to see in a future period interest rates rise as a result, provided the rise in inflation is expected to continue. If it is expected to be just a blip before a continuation downwards, it's unlikely we're going to see interest rates do the same thing. It's more likely interest rates will just continue downwards like that. But if we do see an expected continuation inflation over a period of time, we're likely to see interest rates actually rise eventually as well. Remember, these don't happen at the same time. These are bars apart. So let's just say 2 months apart, okay? So we actually see a delayed reaction in interest rates rising when inflation does rise. And obviously moving on from there, we can see this graph over here, which shows us how the risk actually estimated return of these investments change, okay? And the difference between our stocks and crypto assets, even though they do have a correlation, based on the changing systematic risk in the market, that being our risk-free rate, and of course our beta, so our overall risk. So we do have rising in systematic risk. The risk return changes between, of course, your risk and your estimated return, and therefore it is less favorable to be taking positions in risk assets when more risk equals the same return. And that is essentially what this is saying. Let's go ahead, guys, and move to the stock market. The same thing is happening over here, rising channel. We don't expect anything to happen until we break over these highs. Again, continuations downwards are likely until we reclaim this strength above. Same goes on Dow Jones. Until we reclaim the strength above, it is looking relatively bearish on the short term. We do expect a continuation downwards. Now, getting that out of the way, let's get into Bitcoin. I wanted to briefly interrupt today's video to discuss the two exchanges we use on this channel, Bitget and BingX. So which exchange should you sign up to? If you look to the right hand side of the screen, you're going to see the list of differences in relation to KYC requirements and the countries these exchanges offer services to. The first link down below being the Bitget link, and the second link down below being the BingX link. No matter which link you sign up to, you're going to get up to 15% discounts on your trading fees, up to $5,000 in trading rewards, and of course, you'll get access to every single MegaWhale exclusive bonus campaign we run on these exchanges. Alongside that, Bitget and BingX are incredibly similar. They are both ranked top 10 in terms of trading volume. They both have extensive liquidity pools and market pairs offering up to 125x leverage. And most importantly, they both offer protection funds for their users to protect you against any third-party hacks. So get started now and support the channel by clicking the links below. Thanks for listening. And I hope you enjoyed that little intro about inflation and interest rates. I think it was about time we went over it again. Let me know if you got any questions down below. Quite confusing stuff, but again, when you wrap your head around it, it's actually really simple. Let's dive into Bitcoin. So starting on this short-term price action and then building it up to the daily, okay, to the 3-day, we're going to talk about the Ichimoku cloud, and then of course building it up to the weekly and monthly. So the short-term price action, we saw it play out absolutely perfectly, right? We saw a full-blown retracement back in to our major 25.2 to 24.4K support. This was a level we have been targeting for Bitcoin ever since we rejected and lost this 32K level. We lost 32K, we said our first target was 28.4, we broke 28.4, we then said our target was 25.2. So we played this out absolutely perfectly, and we'll discuss what this means in just a second. First and foremost, we have to identify that 25.2 is a major bullish support, okay? It's a major bullish support. So keep that in mind when we do our short-term analysis. So moving on to the short-term analysis, we can see we have retested that major high time frame short-term support. We have now major high time frame bullish support, We have now boosted up to this upper level resistance upon the ETF news, right? That pushed the price upwards. It's a mix between the ETF news and the fact that we've reached bottom side liquidity, okay? When we reach a major area of liquidity on a high time frame, we generally see a strong and opposite reaction in the opposite direction initially, as that liquidity has been grabbed and new positions flow into the market. Again, bolster that with the ETF news. We saw this rapid surge in price action, very strong surge in price action that just pushed upwards and upwards. However, on the short term, everything remains valid. If we're looking at the current structure, we are within this horizontal structure. Once again, I know we're back in that godforsaken 30-day range we've been in for basically the entire month. It's been a pain in the ass, but we're back in it, unfortunately, and the ranges remain intact. If we're looking at the short-term price action, we are currently retesting resistance, guys. Resistance is resistance until it is not, and therefore, we should be expecting this to act as resistance, which it has been doing over the last 2 days. If we really take a zoom in over here, we can see on the RSI, we actually have a little bit of exhaustion showing with the bearish divergence printing, right? We have rising price action, we have decreasing momentum. This is a bearish divergence. So taking a look at the short-term price action even further, we drop down to our hourly chart, we can see that bearish divergence is exacerbated. On the hourly chart, we can see now just to the extent of this divergence playing out. We see falling RSI, we see rising price action, okay? Slightly rising, but rising nevertheless. We have a very clear bearish divergence. If we want to go ahead and bolster our statement, we can go ahead and add a very important trend line, which would be this trend line right over here, and we can say this is our current structure, this consolidation structure we developed at this range of price action above the POC. And therefore, we can say if we lose this uptrending support line, which matches that 50 EMA, we will see a continuation downwards to retest our lower base of support, and that needs to occur prior to a break above this level. Of course, zooming back out to the 4-hour chart, that level of 26.3K, actually we'll go back this way, 26.3K, just so we can bring that cross back up, okay, is going to be a bullish trigger point, meaning if we are able to clear this level and push upwards, we're likely to continue to 27K. While we remain in this, we are likely to continue downwards. So the short-term price action, watch that trend line, watch that 50 EMA, watch momentum. If momentum continues down, the price action breaks that uptrending support line, but loses a 50 EMA, if it breaks below the POC level, we're likely to see a continuation back to retest our lower support. And of course, we lose our support, we're continuing back into this range. For the bulls to really take control, we need to see a break over 26.3. Okay, that is essential. We absolutely need to see a break over 26.3 in the short term. If we see a break over 26.3, we then head up to 27K. Okay, let's go over to this chart because this chart is actually quite important right now. If we're taking a look at the daily chart, we can see a very important indicator on the bottom, my favorite indicator, the RSI. In fact, the RSI is retesting what we like to call a bullish momentum trigger point, okay? It is not a particular price on the histogram or a level on the histogram. It's not oversold or overbought. It's a diagonal trend line that matches or is meant to reflect the current or most recent structure of price action of which we have been developing within, right? This range on the RSI is representing this range of price action that we see on the chart above. Okay, so perfect. So how can we use this to represent a momentum shift? So we take a look at the price action. We've been in a very clear overall downtrend right over here. We draw these peaks on the RSI chart over here. We take this first initial one over here. Okay, we always take the first one because we have our bearish divergence. Okay, if we take a look at the bearish divergence, that is our bearish divergence. The second high on the bearish divergence is a overextension based on price action. If we take a look at the RSI, our RSI high is early. We always draw the RSI high on the early one, not on the high of the divergence. We drag that one across, okay, we can see we match those points up. Of course, this is our overextension, our retest of 28K, again, a point of clear confluence. And we can see that the RSI trend line is now retesting again over here. This represents a test, okay, it's a test for momentum to turn positive. If the RSI is able to break above this level, we're likely going to see a continuation to retest this downward trending black line, which would take us to about 27,000. Again, that supports the claim on the short term that if we break over 26.3, we're likely going to continue up to 27,000. So we have confluence here on the short term matched up with confluence here on the daily from both our structural levels and our technical levels. So we have this double confirmation. Until then, resistance is resistance until it is not on the short term. And of course, that is going to be acting as a resistance over here for the RSI. If we do break upwards, expect a continuation upwards. So bulls don't really have full-blown control yet, but they have definitely shifted some liquidity and momentum toward the top side that potentially will be turning positive if it continues upwards. Until the bulls are able to get back above this level and really start reclaiming 28K, 27K, we're still in this weekly bearish trend. A weekly bearish trend really doesn't come, turn over until we back above 28K. Perfect. So the daily bearish trend will be reclaimed. Okay, we'll turn daily bullish if the RSI can break above and the price action can break above this downtrending diagonal resistance. Daily trend turns bullish, the weekly trend is likely to follow, and then we're likely to continue upwards. Until then, guys, we are in this downtrend, and if we do lose this lower base of support, we could definitely continue lower. So let's take a look at some of our key levels. Again, if we zoom out, we can see how significant the 25.2 to 24.4K support is. If we lose that level, we enter a macro bearish trend, and that is why the bulls are defending this level so aggressively, and that is why this level needs to be defended so aggressively if the bulls want to keep the price upwards and preventing it from going into a macro bearish trend. No one wants to see that. We do not want to see it, right? Regardless of what you're doing, regardless of what you care about, you want to see lower prices, blah, blah, blah. Who cares? No one really wants to see Bitcoin go down to 20K again, okay? If we're thinking about it logically for the space, okay? Volume is at all-time low. Volatility is at all-time low. We're seeing ETFs come through. We're seeing capital investment coming in. We don't really want to see the price go too much lower. The price is going to get messy. It's going to get choppy. It's going to be very hard to read. We want to keep the price healthy and up, okay? The broad scheme of things, everyone actually wants the bull run to start, okay? Everyone wants a bull run to initiate. And again, it's still a very long time until we get a bull run, but if we go down to 20K, if we go down to those lows, it could potentially delay the bull run. It could potentially drag it out and have a later than expected start. So moving on from there, guys, if we take a look at the higher time frame charts, we can see the 50 EMA on the monthly was absolutely perfectly retested. Again, we do not want to see a loss of that level. If we lose a 50 EMA on the monthly, that will signify a monthly shift in trend. Again, where does that sit? It sits at 25.2K, guys. Everything lines up perfectly. You're probably thinking, wow, what the hell? Yeah, we've been talking about this stuff for months, guys. We've been talking about these levels for months. And you can see, back over here, back in these ranges we're talking about, even if you remember our videos, all the way back in these ranges, we were discussing how significant these levels are, these horizontal levels. The horizontal levels do not change. It's very, very the same. If you go back and watch our videos from a year ago, you'll see we're still talking about these levels because these levels are valid for basically forever. While the price moves in these ranges, these levels are valid. They're always going to be levels of liquidity. Levels of liquidity generally do not dissipate. New levels can be formed, okay? But the old levels, they generally remain on the charts for the future and when we retest those at some point again, which we inevitably usually do. Moving on from there, guys, we can see exhaustion happening on the weekly again. The weekly is in this position, like I said already. We have developing weakness. The weakness is not yet strong weakness. So like I've said already, we've lost the upper band of the Gaussian channel. We lost the bull market support band. We lost the 50 EMA, right? We have weakness. There's no doubt about that. We have weakness. We have a downtrend, but it's not a strong downtrend. It's not a strong downtrend yet. It becomes a strong downtrend when 24.4 to 25.2K is lost. We lose this level over here. That is when this downtrend turns into an aggressive downtrend. Until then, we are looking like we're plateauing outwards. The bulls are trying to take back control for a bounce upwards. If the bulls want a full-blown, completely take control of the charts, completely go bullish again, we need the price to break above 28K. That is an essential requirement. 28K must be reclaimed. We need to break above this level on the chart over here for bulls to full-blown take control. Thank you for watching, guys. I hope you have a fantastic day. I hope today's video was informative and educational and beneficial. I hope you walk away from it with something new, but more importantly, a better understanding of what's happening. I'll catch you guys in the next one. Check out the Crypto Academy courses. It is a link down below. If you want to learn how to analyze charts, if you want to learn how to trade, that is the place to be. And furthermore, if you're interested in joining us on our second channel, it is down in my YouTube channel, MegaWhale Alts. We're going to be talking about altcoins every now and again. Again, not going to be doing it too much every now and again a random video for altcoins just doing TA like this. Thanks for checking it out, and thanks for watching. See you guys tomorrow.